Welcome to our ATEL Winter Conference 2020. Today we will have three major topics we will address. The first one will be KYC solution. We will talk about a KYC solution and the KYC network. Very interesting solution that you will certainly appreciate it and are interested in. The second presentation will be made by StoneX, and StoneX will talk about the complex cross-border payment in foreign currencies and foreign countries, but more exotic countries where we can face some problem. And we will finish the conference by a presentation on the best way to evaluate the smaller companies, the SMEs, or the non-listed companies. So I hope that you will enjoy these three presentations. But now let's start with our first speakers. For this presentation, I'm pleased to invite Pascal Maurizini, CEO of iHub Luxembourg, and Paul Gerhard-Haas from BFS Finance. So welcome to both. Before starting our panel session, I wanted to make a short summary of the issue around KYC. As you all know, KYC is and remains a key issue for corporate treasurers. You all know that ATEL has always been rather active in promoting solutions and endorsing initiatives. However, even if Swift's KYC register was presented recently at ATEL, it's an interesting solution, but we also wanted to cover other solutions and other potential initiatives. So there is also, it's also useful to look at another initiative in Luxembourg and abroad. And what I wanted to do today is to introduce you Symphony and its networks approach and the potential, let's say, to connect to local or regional existing solution to respond to multinational companies' requirement. We also need more automated solution with AI to smooth onboarding processes and maintenance of KYCs. We think at ATEL that there is no one-fit-all solution. There is room for several solutions, and we also believe that the solution may come from a network of local and regional solutions interoperable. We also keep, let's say, liaising with other members of the EACT to coordinate initiatives and best respond to our members' expectations and needs. Therefore, I'm pleased today to talk about what I found a very promising and interesting solution. I suggest that we start now with Pascal Maurizini from iHub. Pascal, the floor is yours.
Thank you very much, and thanks for the invitation. That's very kind. Hello, everyone. So my name is Pascal Maurizini. I'm the CEO of iHub, and what we offer is a KYC outsourcing solution and made in Luxembourg. Why am I saying outsourcing solution? Because with our solution, you have the ability to transfer your stock of clients to us, and therefore we will going to be doing the maintenance and the periodic review of all the files of our clients. Typically, our clients are banks, transfer agents, or asset managers, but also insurers or lawyers, for example. The company was created in 2016, and actually we really staff it in March, April 2017, and we built it from scratch. Means that we did the development, so the whole technology from scratch here in Luxembourg with the expertise of the local expertise. And today what we offer is the ability to have the data and the document hosted in data tier 4 here in Luxembourg, which is EBRC. Naturally, we'll do the maintenance of the file, we'll do the periodic reviews. And when I'm saying we are doing the periodic reviews, it's very important that at the heart of our system, understand what people need were about also KYC. And I found out that people were wanting standardization and sometimes also the blessing of the regulators. Standardization in terms of risk, you don't know, it doesn't exist. Everyone is different, and everyone wants to apply their risk-based approach differently for several reasons and for the nature of their own business. In terms of regulations, you won't find any regulators who would actually choose a solution and say you have to use this one. So here we are, 4 years later, with a true made in Luxembourg solution and live since a year, with more than 250,000 files within the system, reviewing this year more than 30,000 files. and with the ability for our clients, excuse me, to get scoring within our system. So the ability to categorize into low, medium, high risk their own clients. The ability also to get screening on sanction, PEP, and adverse media, and to get a sophisticated documentation matrix for each of their underlying clients. Above that, of course, our role is as a third-party validator. And this is what we're also offering, is that we're going to check the files and make sure they are in good order, so that our clients can then continue peacefully, if I may say, their business, or actually demonstrate to the regulators that they have done their job in terms of regulatory requirements. I'd like to come back on one thing, which is, you know, within a startup, usually there is an ID. And the ID in a startup is very important. However, this idea of having a centralized KYC repository is in the air since 10 years. So you can't say it's a new idea so far. But the execution is the key. And to execute it, you need a team. You need a strong, skilled team with people. And you also need strong shareholders to support this initiative. So I'm proud, actually, to have as shareholder post-Luxembourg, and also now, since recently, BGL, BNP Paribas, who are actually supporting us in that adventure, who's now really taken off. So in terms of developments for next year, we're going to be onboarding 2 leading banks and 2 leading transfer agents. In the pipeline, we're also going to be delivering the automated formula for self-certification and the UBO form with electronic signature. And we're going to be continuing improving the automation of the data extraction from the various trade registry around Europe, but not just only Europe, in order to be more faster in reviewing the file and helping the new customer to be onboarded and get a completed file. So voilà, that's what I'd like to share with you on IHUB.
Thanks a lot for this very interesting introduction. So now I do propose to have a short introduction of Symphony by Paul Garrard. Paul Garrard, working for BFS. BFS is Bertelsmann Finance Services. Paul, could you just give us a short introduction about your solution?
Yes, sure. Thank you very much, Francois. And thank you very much to all of you for listening so carefully. It's a great pleasure for me to present at this ATEL Winter Conference. Actually, we have started in a very similar way from a Bertelsmann Finance perspective about 2 years ago. This resembles pretty much the approach that IHUB has taken for Luxembourg. And getting through that process of establishing this platform for the German market, we found out actually by talking to the corporates on the one hand side, to the treasury associations, but also to the banks on the other hand side, that a Germany-only approach is not sufficient. And that's why we invented Symphony. Symphony stands for Customer Information Network Intelligence. And the concept of Symphony is to really act like a symphony, like a sinfonia, having various players internationally that contribute to the overall KYC solution. So it's a cooperative, federated approach to KYC. And we strongly believe that this is the game changer. So Symphony connects the various local initiatives, like we have heard about IHUB. We have our local, if you call it like IHUB in Germany. It's a utility-based approach. And as Pascal mentioned, this is almost 10 years ago, the original idea. But what is the game changer is that we make all these initiatives interoperable. And Symphony, and this is the network intelligence of Symphony, brings together the local expertise, the local relationships of, let's say, IHUB talking to regulators, IHUB talking to local banks, and so forth, and connecting these in order to make the KYC solution coming out an international solution. And the key learning of Symphony, or the key learning of the other initiatives we have seen in the market, is that it is not the utility approach on the one hand side, but it's not it's neither the true network-based approach. So we need to take the best out of the two worlds, network-based and utility, let's call it local expertise-based approach. And that is what Symphony stands for. And the overall objective of Symphony is to make KYC sound better.
Okay, thanks a lot for this introduction. So now let's start with our key and main priority concern for corporate treasurers, but not only. Do you agree with this statement? And it is also a priority challenge for banks, for example.
Yeah, it's a priority challenge for bank, but also for the fund industry, but also for the insurance industry. It's really private equities. It's a challenge for all of the institutions who are subject to the AML regulations. So as a whole, globally, the whole industry is concerned with that. And also, if you go back a year ago to a survey that the ABBL did with the banks, one of the questions that was raised by the ABBL was concerning the potential mutualization of functions. And what came on top of the survey from the respondent was the fact that, yes, KYC, also regulatory reporting and so on was at the top of the agenda. And so this is where mutualization kicks in, but economies of scales into having a place where to have a fresh and updated information on your clients.
So it's an issue from both sides, buy and sell side. No question for you, Paul. Could you explain briefly and describe how with the Symphony network you describe this new concept you plan to team up with local partners? You mentioned that, local, regional. Do you have already set up partnerships?
Yes, we're talking to several people around the globe. Let me put it that way. As I said, we are launching this from the German perspective, having to provide international solutions for the corporates and for the banks. And therefore, we have started talking to partners in Asia, in Singapore. We are partnering with a post organization in Switzerland, and we are partnering with another banking group in the UK. And on top of that, yeah, I think we can also talk openly. We are partnering with iHub as a Luxembourg-based hub for the network intelligence that I explained before. So the idea is to bring all this together and to make one good KYC solution for international purposes.
Okay, thank you. And
yeah,
you
no,
want to add something?
Absolutely happy to support this initiative. Sorry. Of course, what I didn't mention before is that we are servicing our clients here in Luxembourg and also beyond, but the clients of our clients are global. All right. So make no mistakes. We are servicing. I mean, we are updating and gathering information on the clients of our clients from the world. However, of course, if we can play a role in support a global initiative of exchange of information by being the champion for Luxembourg corporates by providing the right information to the Symphony, we believe that's an interesting way forward in order to make this thing happening. Like as I said to you before, we've been very resilient as a startup so far. We did a lot of investment, especially in security and in the confidentiality aspect of the platform on top of the functionality. And we want to share this expertise with Arvato Bertelsmann Group, with the Symphony, and helping building something for the future and for the world community in addressing this particular issue with a global issue of KYC.
To better serve your customers. So maybe coming back to another question, Paul, it means that with Symphony, the idea is to open the network to local solutions. Is there therefore not incompatible with those domestic or let's say local solutions? Or regional solution like the Scandinavian solution, for example?
Yes.
They will be all interoperable, therefore. So could you elaborate on that? The way to exchange information and data between the different actors?
Yeah, what makes it so different is that we are establishing a dedicated protocol for regulatory data exchange under Symphony. This is a unique approach that has never existed. So if we look into the market, there have been old legacy protocols that are trying to be used for KYC exchange as well, but we are establishing a dedicated protocol which is flexible enough in order to link all these local initiatives. And of course, there is a lot of difference in the local KYC specific requirements, and therefore we need to flexibly cover these individual requirements under the Symphony protocol in order to, for example, if there is a Luxembourg-based corporate that wants to have a banking account in with a German bank, with a Germany-based bank, it needs to fulfill all the Germany-specific regulatory requirements. And this is the unique differentiator for Symphony, that we can support these flexible requirements internationally.
Thank you. Maybe you want to comment, Pascal?
I think there is a question before.
Yeah, Pascal. So, but yeah, coming back to the question of let's say teaming up and partnering with bank, I think it's key to succeed, because I do not foresee an emerging solution without the partnership between buy and sell side. Do you agree with that statement, and could you explain further?
Yes, the best way to build a platform that satisfies the need of our clients is to do it with them. And we were blessed actually to partner with BNP Paribas in co-designing the retail banking segment. So we do the same with EFA for the transfer agency. And so therefore, we've been working hand in hand in order to address the issues and the needs they had. And we'll continue doing so, probably with other sectors as well.
I think it's key to get all the actors around the table. So maybe we should go back to another question. So I think that will help to automatically feed the KYC register to smooth the processes. We know that we need to feed the system, and it's important to maybe try to automate that. If it's simply a central repository, you must feed manually. We will lose, in my view, part of the benefit of the technology. How do you see that use of artificial intelligence in KYCs?
Yeah, of course, it's a very important question, because there's no way to replicate what the banks are already doing today manually, if I may say, or trying to automate within IUB. Okay, so technology, we are RegTech, and so therefore the tech in RegTech is very much important. And there is 3 ways to update a KYC file on a corporate, if you want, within IUB. Either you get the file from a bank, okay, and you have to do the verifications, or you can also get the corporate to connect to IUB and deposit the documents, modify the data, say, okay, I have a new shareholder, I have a new a board member, I have a new authorized signatory, and so on. And we're going to be doing the checks and the verifications behind. And the third thing is the automation we do with the trade registry, where we go and get to the source, to the golden source, really the fresh and certified official data to the trade registers of various countries. And for that, we use extractors, orchestrators, or RPA, call it robot, whatever you want. Combined also with what we call machine learning, means that once we get the official documents, we can read them like within OCR in a structured and unstructured file, and then import automatically within our system, after having verified the data, all these data. So the aim for us is actually to head straight to the UBO, because UBO is a key element. And when you go to the UBO, you have to do all the rest. You have to know who are the intermediary shareholders. You have to know all the details about the company. And then at the same time, we satisfy the regulatory documentation of the file that our clients are willing to have within the system. So, but at the end, of course, when you can't get all you need via the automation, the human being is there to intervene and, of course, do what the machine cannot do.
But maybe another question for you. In what sense is Symphony a different model compared to the Swift KYC-R or KYC registry?
Yeah, as I mentioned before, Swift is less flexible in terms of the protocol. So the protocol itself of Symphony is dedicated and it's fully flexible, adapting to the local needs regarding regulatory requirements. So we can fulfill all the specific requirements for a local market like Germany, like Luxembourg, like Singapore. And we can even go further and provide additional requirements needed by specific banks. So for example, if there is a bank asking for the shoe size or for the CEO, we can also support that because the protocol is fully flexible and we can easily capture that additional data field on top of the regulatory standard. The other aspect is that Swift is very centralized. We have a central approach with Swift, whereas Symphony is decentralized. It works on a distributed ledger technology. The network approach is linking the local initiatives based on the distributed ledger technology.
Yeah, and if I may comment, I have the impression that Swift has not in mind to develop what Pascal explained, to go and try to get automatically the information from the different, let's say, secure sources, what could also remove part of the work for the end users. Yeah. But maybe a last question for you, Pascal. Do you plan to add other financial services to the pure KYC solutions?
I would say, why not?
You mentioned some.
But yes, but actually our roadmap for now 2021 and 2022 is pretty full. But of course, we've been already approached to offer MiFID, to offer FATCA reporting and transaction monitoring. So, I mean, in terms of ideas on how we could also take IUP to the next stage, and Symphony is another initiative. We have a lot, but I would say, well, let's now
step by step.
Voila. Thanks.
Okay, thanks to both for this comment and presentation. So it was really interesting to see where we stand. We presented Symphony a year ago, but it's good to see that we progress. It's a difficult and a long journey, but I'm sure that we have a promising solution, and I'm pleased to have an opportunity tonight to present you these two, let's say, good initiatives. So thanks a lot for your attention, and now let's move to the next presentation.
Thank you very much. Thanks.
Thanks.
Thank you, Pascal. Thank you, Paul.
Bye-bye.
Now let's move to our next presentation by StoneX. Cross-border payments have been for a while problematic. Even Swift only launched its GPI solution last year. It simply illustrates how even such a network faces problems with payment across the borders. In Western countries, it seems to be less an issue than more exotic and faraway countries. However, with deduct, complex correspondent banking systems, risk of losing days before being credited, impossibility to track payments, and risk cross-border payment remain complicated. The complexity with some currencies and some countries come from the currencies first, the exchange and banking system, local regulation, and many other reasons. Even large global banks are not able to make payment in certain regions. It is why having a third party and a non-banking partner may be a solution for these complex currencies and countries. StoneX specializes in transferring funds to this developing world. Treasury needs competitive and transparent pricing, along with guarantees and secure delivery, whatever the currency or the countries. What makes StoneX specific in the fact that they have fully fledged domestic payment capabilities in these countries and can make payment for banks in areas where these banks cannot make them, for NGOs and for corporates. They offer a full service including hedging of those currencies and ensure that the counterparty will receive money on time and in full. For the payee side, they make the process seamless, transparent, with better exchange rate and secured. It is key because they are benefiting from the remitting local currency rather than, let's say, converting out currencies. They leverage the strength of partner relationship to guarantee timely and secure delivery of payment in the full amount. Today we will have an interview of StoneX specialist who explain problems treasurers are facing in some region with some currencies and how to sort them out efficiently. Now let's introduce Philippe Schindler. And the first question for you, Philippe. We know ATEL FE Stone, which made several presentations to ATEL's members in the past and published a couple of interviews. However, I've noticed that you have recently rebranded the company. What is your new name and why?
Thank you very much, Francois, for the introduction, and good afternoon, everyone. Yes, indeed. To answer your question, we decided to rebrand the company this year under the new name StoneX, which will greatly help the pronunciation and readability of our name around the world, as our customers are based in 130 different countries. Our earliest constituent company, ASA Stone Wealth Management, was actually founded in 1901, and on the commodities side, Stone & Company dates back to 1924. So the company has quite a long and rich history in the markets. Our former name that you quoted, INTL FC Stone, was the later result of the merger between International Assets and FC Stone in 2009. And all these years, we like to joke about the fact that this is a classic example of a name you end up with when you get married many times and no one wants to drop anything. So in 2020, we finally rebranded the company to StoneX, and we do believe this new name will position ourselves better towards the challenges of the future.
Could you introduce briefly StoneX?
Of course. So to give you a bit of an idea, so StoneX Group Incorporated is a US public company. We're listed on NASDAQ with total assets amounting to approximately $10 billion. We work with a very solid balance sheet, and we have about 40 offices on the 5 continents, serving roughly 30,000 commercial and institutional clients. There are 5 major different departments within StoneX, which are commodities, foreign exchange prime brokerage, securities, advisory services, and global payments. This enables us to trade and specialize in a large and diversified range of markets and products, amongst which, and the list is quite long, metals, energy, grains, dairy, renewable fuels, softs, livestock, interest rates, securities, and obviously currencies. And in order to facilitate their access to the markets, we support our customers throughout the entire life cycle of a trade, which is quite unique in our industry. From consulting and boots on the ground intelligence to best execution, post-trade clearing, custody, and settlement. And we support these services with consolidated key tools such as robust market intelligence, sourced out of our global network of traders, analysts, and correspondents. Strong investment in technology with a unique blend of digital platforms, and especially high touch and experienced client services, in order to try to always focus on adding value to the customer's process.
Now let's move to Niels van Duinen from the Global Payment Division. So, deeper in the global payment, Niels, what are the main problems that you are proposing solution to?
Yeah, thank you, Francois, and Philippe, of course, for the overview of the group, and welcome to everyone on this webinar. So, in order to answer your question, I think it'd be good for everyone to understand our position in the market a bit better, and really what our purpose of existence is. So, to provide you our perspective, we as Global Payments have been a specialist cross-border payment provider since 1986. And in that time, we've built up, well, let's say, an impressive customer base that now includes many of the world's leading transaction banks who use our correspondent bank network and expertise in the developing world to complement their own coverage in the more developed markets. And with the globalization of trade, we're witnessing an explosive growth in the number of payments from the developing world to the emerging markets. And at the same time, governments, regulators, and commercial actors increasingly favor payments being executed in local currency and discourage the use of dollars to settle local obligations. So institutions like ourselves really exist to demystify the cross-border payment process. Developing and frontier markets shouldn't be really thought of as far-reaching. They are easy accessible. And that is really what our role in the payments ecosystem is, to facilitate access and efficiency. So to go back to your question, Francois, what are the main problems that we're proposing solutions to? Well, first of all, unlike many other providers in the cross-border space, we run our own network of local correspondent banks across the world. So instead of relying on one or two global banks, we actually transact in the local target market of the intended payment, engaging with local banks in order to secure a fixed, low cost, and maybe even more important, clear, guaranteed delivery times of payments. So we're able to offer upfront FX quotes with fixed cost in the form of an FX rate with an agreed spread for the transactions that you have to execute, guaranteeing that the payment will arrive in full with no fees or anything else deducted, and the delivery date of the funds, of course. And because we only interact with local banks, we're able to ensure highly competitive exchange rates. And all of this is supplied upfront in a transparent manner, putting the ordering customer in control of its costs and helping avoid problems of payments arriving to the beneficiary not in full. Obviously, requiring complicated reconciliations and maybe even having to send additional funds to settle the obligation. So that is really what we offer in a nutshell.
Given the member base of ATEL being mostly corporates, can you tell me how this would work for those type of organization in more detail?
Yeah, of course, a valid question. And let me give an example, a case study, if you like. So we work with this leading global insurance group that needs to make multiple local currency payments all over the world. So the company I'm referring to makes over 3,000 cross-border payments in 52 different currency pairs on a monthly basis to locations all over the world where they don't hold a local currency account themselves. So they are able to upload these payments in one file directly into our pricing and payment system called FXecute. The system auto-prices the FX deals, but also validates the instructions and notifies the ordering customer once the transaction settles. So with access to this technology, coupled with an extensive network of over 300 local correspondent banks across the world, companies are now able to engage in cross-border business to pretty much anywhere in the world, making local currency payments almost as simple as domestic payments in their own markets, and of course, for a guaranteed cost. And there's one more thing I would like to add here. With the significant investment over the last 5 years in technology on our side, we are now in a position to offer a highly simplified process to companies, offering auto-pricing of FX transactions, the validation of payment instructions, and straight-through processing in over 140 different currencies. But of course, we can also offer pricing through more traditional channels like Reuters, Bloomberg, 360T, and FXall. So I hope that answers your question, Francois.
No, David will see. We have two Davids at StoneX. Given the global nature of your payment business, could you give us an overview of how payment flows have been impacted during the COVID-19 pandemic?
Thank you, Francois, and hello, everyone. Well, I really think there is a twofold answer to that question, basically two ways to look at it. Firstly, has global payment infrastructure held up? And secondly, how have payment volumes and corridors been impacted? And it's two very distinct things. So on the first part, quite remarkably on a global basis, as seen by this slide, despite lockdowns in nearly every country globally, the global settlement system has remained remarkably robust. From Asia Pacific through Africa, all the way to Latin America, the impact on payment settlements has been incredibly minimal. Reduced working hours, remote working, banks and clearing systems from Taiwan to Kenya have suffered little to no impact. At the same time, access to FX liquidity has remained constant, and that is irrespective of whether we are talking about the British pound, Japanese yen, or a more exotic currency like the Ugandan shilling. So for this part of the question, there's no real need to dwell because the impact has been remarkably small. However, inevitably, when it comes to payment flows corridors, there is a much more distinct picture that can be found. As you can imagine, and we all know this, some industries and businesses have inevitably fared much better than others. For us at StoneX, due to the nature of payment flows we facilitate for a variety of different sectors and industries, whether that be large technology firms, car manufacturers, charities, insurance companies, we are fortunate to have at least some grasp of the COVID-19 impact, particularly as we help facilitate these flows into currencies all around the world, from South Africa, Malaysia, all the way to Brazil. And so today, I'm just going to give one or two examples of what we have seen. And in my opinion, the stock market is a really good gauge for the impact on cross-border payment volumes. And there are particular sectors of stocks which have actually really benefited from the restrictions imposed by COVID-19. The financial markets like to call these stay-at-home stocks. These are stocks that have really benefited from us sitting on our couches or working in our home offices. And so the biggest example, the prime example, is big tech. Big tech has been the largest benefactor of the virus when it comes to revenues. And here at StoneX, we have certainly seen flows increase in this sector as well. So I'm talking your media content platforms, which we have used to binge on numerous TV series throughout the 1 or 2 lockdowns we've been through. They are sending larger flows into places like Brazil, Colombia, Iceland, even Malaysia, as demand for the product grows in regions all around the world, and they need to see more content to that platform. Your favorite technology suppliers are having to import more raw materials from places like Taiwan and Korea to meet consumer demand. And then there are the online-only shopping websites, the logistic cloud hosting companies that are having to pay more money to offshore suppliers in countries all around the world. As demand increases for this type of user experience, as consumer habits change because of this wicked virus. So for the first part of the question, payment sizes seen in 2020 on a cross-border basis are certainly dwarfing those seen in 2019 for many industries. But of course, that does not tell you the whole picture. There are many industries that have been negatively impacted. And, there's some which look resilient now. I'm thinking, like the charitable NGO payments, which could face becoming suppressed in the years ahead as government budgets reduce. There are, of course, many industries impacted, hospitality, travel, but we won't go into so much detail on those today. I'll just mention a couple of examples from what we've seen here at StoneX. So generally, we have noticed a definite downtick in payments into emerging markets for at least certain types of payments. So I am talking capital injections, share purchases, acquisitions, loans. And this is mainly down to the market volatility seen in these emerging markets since the COVID-19 pandemic broke out in March this year. Investors have certainly taken a step back. In most cases, they're sticking to their core business rather than seeking to expand. So countries such as Vietnam, Brazil, India, all fast-growing emerging markets that we have facilitated large flows in recent years, payments into these markets for the reasons which I've already mentioned, whether they be made in dollars or local currency, they have certainly reduced. And it's a similar story for the energy sector, which was so badly impacted by falling energy prices at the start of this outbreak. When oil prices went negative, when the world almost ran out of storage space for oil due to the immense oversupply. The inflows that we at StoneX facilitated into new and energy existing projects in areas such as Africa back in 2019, these have certainly reduced this year. Companies reduce cash flow. They're not willing to take excessive risk. And of course, payment flows, cross-border payment flows, reduce because of this. So just in a nutshell, based on a few examples, this is some of the things we have seen here at StoneX when it comes to cross-border flows.
This year, it's fair to say that the world has faced several challenges. Could you give us your view on what factors are likely to impact major currencies such as euro and the pound over the next 6 to 12 months?
Yes, of course, Francois, of course. This is what I find the most interesting part, always, as a trader, day by day. Well, firstly, the last few weeks have been dominated by two main news stories in FX, which everyone will be aware of. Well, there's three, but I'm going to discount Brexit just for the moment. These are Joe Biden winning the US presidential election and the expected fiscal stimulus that comes with that. And of course, the regular, incredible, successful trial results from a number of COVID-19 vaccine candidates. And as we can see from the slide on show, both these news stories have served to boost global risk appetite, causing global equities to rally and for the US dollar to be generally crushed against a whole host of currencies. And why is that? Well, some will remember that at the outset of the COVID-19 pandemic, we saw immense strength of the dollar in what was the flight to safety trade. The dollar was the world's safe haven. We saw that immense market volatility. And most of the time, it was significant gains for the dollar against nearly every currency. Well, now we're seeing this trade unwind, albeit not so drastically, in a much more gradual sense, I would say. Secondly, with Joe Biden now president-elect, most investors expect continued fiscal stimulus, and importantly, much larger than what we would have seen under another Trump administration. Investors are really expecting the US to spend big out of this pandemic, and ultimately, this will promote a weaker US dollar. And finally, the third important point I have here is most investors expect long-term low interest rates in the US and very easy financial conditions. This will ultimately be very positive for global growth outside of the US, as low interest rates in the US will promote easier access to credit, as most borrowing takes place in US dollars, particularly for emerging market countries. As investors start to seek out yield and returns on their investment, which may not be available on US debt, this could lead to a bumper period for high yield, riskier debt, emerging market currencies, and value stocks, those ones who suffered so badly during the worst of the pandemic. So on this basis, on the factors I've mentioned, continued dollar weakness seems to be expected, and it seems likely against both G10 and emerging market currencies. But what are the risks to this view? Well, a successful rollout of a COVID-19 vaccine, a really successful one, quicker than expected recovery for global growth, and particularly the growth of the US economy, a quicker return to the norm, if you like, will likely lead to speculation over reduced stimulus from governments and a tightening up of monetary conditions by the global central banks, particularly the US Federal Reserve. Those assets that are supported right now, the ones I just mentioned, emerging market currencies, equities, high yield debt, they could start to face a slightly more bumpier ride if investors start to become unnerved. And on the other side, well, currently most market news is risk positive, thereby negative for the US dollar. A successful Trump election process, however unlikely that is, or an unsuccessful rollout of a COVID-19 vaccine, including further drawn out lockdowns, this could see a return to the fear trade, a flight to safety trade, where dollar becomes king once again, the currency of choice for investors. This could see swift and sharp dollar strength return. And ultimately, these are the events which I deem to be the main factors influencing performance of major currencies in the next, 6 to 12 months. But there is another factor, which I briefly mentioned earlier. When it comes to euro versus sterling or sterling versus dollars, the continuing issues of Brexit are still playing a large factor, sadly for me. The never-ending story of Brexit still changes day by day, driven by headlines. But the truth is, in my opinion at very least, even if when a deal is agreed, the constant Brexit narrative will likely carry on in the months and years ahead, for all of our board, I'm sure. The amount of detail that needs to be worked out around any deal that is eventually agreed in the next week or already agreed, there is so much of it. And in my opinion, most investors, sterling traders, will move on in the months ahead. Brexit news will start to lose its influence on sterling trading. The significance of what happens next is becoming already less and less important. And I think the factors that I've already mentioned, the more global macro factors, will come much more into focus. I mean, of course, this is none of the things that are ever easy to predict, especially given the world that we live in today and the shocks, the seismic changes that we're experiencing. But this is how I see it at the moment, Francois.
And now David Unsdorfer, the other David of StoneX Technology Solution. Could you talk a little about why StoneX decided to develop technology offering?
Sure, thank you, Francois, and thank you everyone for having us. So we've heard today about our global payments division, and this is a business that sends many payments into 170 plus countries, 140 plus currencies. And on a daily basis, this business receives massive numbers of payments instructions, status queries, confirmation requests, and so on. And these are done in very, very large numbers from a very large range of underlying customers. At the same time, we, StoneX, need to turn these instructions around to our correspondents for onward processing in equally large volumes and to hundreds of different counterparties. And fundamentally, this business relies not just on a strong network of correspondents and partners, but also on robust and scalable technology and automated operational processes. And it's only because we have these two things in place that we're able to run our business in a very high level of quality that our customers expect of us. Now, it's all very well and good that StoneX enjoys great technology and great automation capabilities, but many of our customers face similar challenges. Many of them operate globally. They also have diverse networks of correspondents and financial counterparties with whom they need to communicate in large volumes every day. They also have a range of applications and back office systems that they need to manage and try to streamline. They are also having to deal with ever-increasing volumes and meeting real-time demands and others. And many of them could also benefit from new technologies to help them run these businesses more efficiently and cost-effectively. So considering the relationships that we've built with our customers in the past 20, 30 years, StoneX decided to develop a dedicated unit that is focused solely on helping our customers meet these challenges. And we do so by offering a range of business-driven financial technology that's geared at helping our customers adapt better to ever-increasing levels of change, to operate more efficiently, and to enjoy a higher level of service.
What are the main challenges that you are helping your customers solve today?
Sure. So we provide a range of services to different kinds of customers. But certainly on the corporate side, we're seeing quite a few common challenges that we're helping our customers solve. So firstly, we help our customers streamline the way that they communicate with all of their financial counterparties. And if I just briefly return to our global payments example, this global payments division needs to communicate with hundreds of correspondents and customers on a regular basis, and we do so using the medium of SWIFT. StoneX Technology Services is itself a registered SWIFT service bureau. So we can help our customers with all things related to SWIFT. We can help them to singularly and seamlessly connect to all of their financial counterparties. And this can be done using SWIFT or non-SWIFT connections as well. But fundamentally, what we offer is our customers the ability to connect to us once, and then we take care of the rest. And this means they can throw away all of their security dongles. They only need to manage one username and password, and it really simplifies the process. Secondly, many of our customers don't have as real-time view on their cash positions as perhaps they would like. And it's really important for customers to have a view on their cash positions for the smooth running of the business, particularly for treasury management and liquidity purposes. So we help our customers to obtain a reasonable view on their cash positions, no matter how many counterparties they have. We do so by helping them to receive end of day or intraday statements from their banks. We feed this data into a dashboard and tables that clearly show them what their positions are. And for those that use treasury management systems or ERP systems, we're able to help integrate these files into those applications as well. And thirdly, and finally, one of the main areas where we're helping is we're helping our customers to normalize their payment processing models. And we do this using our messaging hub solution, which is comprised of smart, powerful technology, standardized operational processes, and automation software. So just to give an example, many of our customers, like I said, have the challenge of sending and receiving hundreds or thousands of financial communications on a regular basis. These communications are being generated by all sorts of different systems and need to be routed to various different counterparties. These counterparties may require data in specific ways to conform with local regulations and requirements. This can quickly become quite a complex process, but it's a process that our messaging hub helps to normalize and solve in a way that doesn't require our customers to make wholesale and often slow and expensive changes to their core applications. So in a nutshell, those are the three areas that we're really trying to help our customers.
Thanks a lot to the four of you. It was extremely interesting, and I do suggest, given the number of questions in some currencies and in some countries, to organize early 2021 a workshop dedicated to answer your question in specific currencies and how to proceed with them. Thanks a lot for your attention. And now let's move to our final speaker, Laurent Müller, from Müller & Associates, to talk about the way to evaluate non-listed companies and SMEs. We know that it's often a problem for our member to evaluate properly small companies. By the way, please note that ATEL will continue proposing a full-day course on company valuation, listed and non-listed, as well as M&A processes. We will have in this session, and we go further into the detail of the techniques and the way to quantify cooperation in Q1 2020. But now we will have a sort of introduction by Laurent. So Laurent, welcome, the floor is yours.
Hello everybody. Today we are going to talk about how to value an SME. But before I begin, I would like to introduce myself quickly. My name is Laurent Müller. I have a PhD in economics and I'm a chartered accountant. I manage a company called Müller & Associates and we provide accounting and corporate finance services here in Luxembourg. First of all, I would like to stress the importance why a valuation of an SME should be performed regularly, not only at the time of a sale, merger or planned transmission. Value creation throughout the development of a company is a substantial, if not essential, source of enrichment for an entrepreneur. Indeed, beyond the salary, the compensation for work, the dividend, compensation for the risks and efforts, the value of the shares is often the main source of income in an entrepreneur's professional career. With this awareness, it is in the entrepreneur's interest to actively manage the business with a view to creating value. He or she can and should thus make decisions with the cash or value trade-off. Hence, such value creation trade-off is also part of daily management decisions. Therefore, SMEs or family businesses are often managed differently from companies with the management that are not shareholders, where profitability often takes priority over long-term value. I'm talking about valuation, respectively value and not price. Let's define these two terms. A value is an offer, while a price represents an intersection between an offer and a demand. In order to have a price, someone has to accept this offer. In case, we establish this offer value by simulating what a theoretical third party would be willing to accept. Thus, the value of a company is not necessarily equal to the price, and on the contrary, the price is not necessarily equal to the value. Between these two concepts, there's generally a negotiation or an arrangement, legal clauses, agreements, or various links between the parties. Now, how is an SME valued? The internet is full of simplistic and formulas for valuing an SME in 2 minutes. But beware, it's not that simple. There's only one way to value a company, and that is to estimate its market value. It's the same for a listed company on the stock exchange. The stock price is a pure market value. So how do we perform such market valuation? We need to determine a value for a company by simulating what a third party would be willing to chip in. Valuing an SME is a complex exercise because of the heterogeneity or the distinctiveness and usually the lack of transparency within an SME. The aim of our exercise will be to identify such non-standardized items and debunk the lack of transparency in order to be able to apply valuation models which are standard models and which target standard companies, and thus to be able to draw a conclusion on a range of values. The valuation of an SME is done in two steps. The quantitative approach, which are the calculations which are more or less known, and the qualitative approach, the analysis and the interpretation which is done beforehand and which many people ignore or do not consider sufficiently. Let's talk about this qualitative analysis, which can be done in different ways. The approach or how you do it is not that important. It is essential to get a thorough understanding on the current and future situation of the company. Often, the SWOT analysis is used as a basis, but other models such as Porter's 5 forces or even other models can obviously be used as well. If we use the SWOT, we identify the strengths and weaknesses within the company as well as external factors such as opportunities and risks. It is important to ensure that weaknesses are well identified and managed and that strengths are enduring and sustaining. After that, it will be necessary to identify opportunities and risks that may affect future activities. Here are some examples. Let's start with risks, where we first need to define what is a risk. A risk is the possibility that an event that has a negative impact on the business may occur. However, some risks can be turned into a cost. For example, a risk often cited in SME is the key man risk, which is the risk that a key person in the company will resign. The risk can be eliminated by hiring a backup, which then represents a cost. The person who sells the company is not a key man risk, as this is a fact that is known in advance. Other SME risks are about the market development, the evolution of the cost of raw materials, the technology risk, or the market acceptance risk if we are talking about an innovative company with a new product. The opportunities are similar but positive. Market evolution, price evolution, general economic situation. Market entrance barriers can also be seen as an opportunity for the one who is present on the market. A barrier can be regulatory, a good example being the regulated sector, or in terms of high investment to access the market, in industrial sectors, for instance. The strengths of an SMEs are, for example, reputation. The opposite can also be the case, know-how, corporate culture, or the fact that the company is a leader in its market. Indeed, if we imagine two companies with similar turnovers and profitability, the one that is the leader in its market is worth more, all other things being equal. A weakness, on the other hand, can be the absence of a clear strategy or lack of governance, but also, for example, contracts that are coming to an end. Some entrepreneurs even confuse opportunity and risk. Here's an example. A company highly specialized in a particular field had built facilities to meet their needs in order to respond to their sustained growth in recent years and to be able to grow even further in the future. However, this investment in new facilities was seen as an opportunity. The company can grow further. However, this investment, which has an impact on profitability, can also be seen as a risk. If for any reason the company will not continue to grow, it will have difficulties to finance that investment. Also, the net asset value decreased as the market value of the asset once bought is less than the value of the liability, the bank debt. The company is therefore deemed to grow. For me, this is clearly a risk rather than an opportunity in terms of valuation. You see that the notions of risks and opportunities might be linked. Let's take other examples to illustrate the need of a detailed qualitative analysis before calculating a value. Let's imagine a company with a turnover of 1 million euros and a profit of 200,000 euros. Without the preliminary analysis, this company could be quickly valued by a multiple of the turnover or the profit. However, certain criteria related to this turnover could influence the value, such as, first, recurrence. A company with a recurring turnover, like fixed contracts over several years, is worth more than a company with a non-recurring turnover. Second, granularity or cluster risk. If this turnover is made up of a few large clients, the risk of losing such a big client can put the company in jeopardy. So this granularity of the customer base has an impact on value. Third, scalability. This is a concept that is often used for startups, but it's also true for every other company. In other words, the focus lies on the ability of that business to serve more customers while increasing costs less than proportionally, decreasing marginal costs. In other words, growth is profitable. And fourth, price elasticity. The price elasticity has a positive impact if a price increase will lead to a proportionally smaller loss of clients, so there would be room for further price increases. These are just a few examples, and there are others to illustrate that simply looking at the figures 1 million turnover with 200,000 euros in profit is not enough to determine the value of a company. The result will be different depending on the answers on the above questions. It is therefore absolutely necessary to ask these kind of questions. We spoke about turnover, but the same sort of questions could also be asked for other factors, such as suppliers, for example. Is there an exclusivity? And many other items. Once you have understood the overall current and future situation of the company, it's important to ask yourself two important questions based on which some accounting figures will have probably to be adjusted. First, the exceptional or the extraordinary. Evaluation can only be done on a neutral or unbiased basis. Therefore, all exceptional phenomena of the reference year must be eliminated. Here are some examples. If a company celebrated its 100 years of existence, which cost 100,000 euros, those 100,000 euros must be rectified as the company will not repeat such a celebration in the coming years. Another example, a caterer that had very little activity in 2020 because of the COVID-19 crisis is not necessarily facing a very low valuation. This caterer probably had a market share before this crisis and most probably afterwards as well, if the company survives this crisis, obviously. So the COVID-19 crisis aspect will have to be taken into account if it's exceptional or lasting. And second concern is the market relation. The concept is all the more important for SMEs and family businesses. Indeed, every relationship of a company must be market-based or arm's length. An example is the salary of the manager shareholder. This salary may be below or above market salary for the position, depending on the cash requirements of the person. In order to value the company, the salary must be correct so that the company's result is also correct. Another example that we often see is rent. If the building is owned by the family, there's often a rent paid by the company that is below the market rent. This leads to the result of the company being overestimated. That rent must therefore be adjusted to market values. There are other examples such as intra-group relations or interest in relation to related parties. A fundamental question also concerns the basis of the valuation. What is being valued? First of all, there is the scope or perimeter. Do we speak about a share deal or an asset deal, whereby with the former, the off-balance engagement needs to be considered. And what is included in the valuation? Real estate is often taken out of the valuation. But there is also the notion of perspective. Does one value the assets, the profitability, or as a further dimension, the past, respectively, the current situation of the company or the future potential? All these questions need to be answered before launching any calculation. In family businesses, valuation is often done with a distinction between asset and profitability, a separation of the two, and evaluation of the current situation rather than the future potential. So in other words, you have to agree on the perspective and then take the right valuation models into consideration. I'm not going to put too much emphasis on valuation models. I'd like to briefly illustrate some remarks with regard to the models. In my opinion, it's important to calculate a net asset value for a company whereby the assets and the liabilities need to be assessed at market values. This represents the minimum value of the company. In order to do this even more properly, it would be good to calculate the liquidation value, where one needs to simulate the termination of the activities with the sale of assets, the repayment of debts, and the payment of notice periods, salaries, or other contracts. Let's move on to the relative approaches, or better known as multiples. This is a notion that is widespread, easy to calculate, but generally poorly applied. Let me explain. The origin of the multiple approach is simple. In order to have a market value, you have to do is trace a similar transaction that has taken place in the past and apply the same criteria to the company you would like to value. If you're a transport company with an EBITDA of 1 million and you know that another transport company with an EBITDA of 2 million was recently sold for 10 million, you can deduce that your company is worth 5, multiple of 5 times EBITDA. The approach is perfect in theory, but in Luxembourg in particular, they have not necessarily been any similar transactions, and if there have been any, the relevant information is not public, especially for SMEs or family businesses. And let's keep in mind that price, what one might hear, is not necessarily equal to value, as there have undoubtedly been agreements between the parties along with the transaction. Therefore, we have to find correct multiples, which is not obvious. We generally consult German or French databases, but as stated, the multiples must be applied with some caution and must be well justified for the multiple and not for another one. Moreover, as the calculation is a simple multiplication, the effect of a wrong multiple on the valuation is huge. And further on, let's not forget what we discussed before, the adjustments following the economic analysis. Therefore, we must also calculate the reference value, EBIT or EBITDA, also after adjustments. That is to say, the exceptional must be eliminated and market relations must be respected. If now you calculate the valuation by multiplying the EBIT with the multiple, then 1, the EBIT must be correct after adjustments, and 2, the multiple must also be correct. A simple calculation with the calculator without adjustments with the multiple that is just estimated or guessed does definitely not provide a correct valuation. I would like to add another comment on the multiples approach, which is in relation to the crisis we are living today. Is it still possible to apply multiples that date back from March 2020? The world has changed and transactions are undoubtedly made differently. All this is to say that we have to be very careful with the application of multiples. Let's move on to the valuation of future potential, discounted cash flow or DCF. To explain DCF, I often use the example of a printer that prints cash. Let's imagine that someone wants to sell you a printer that has printed 100 euros every year for the last 10 years. How much would you be willing to pay for this printer? It becomes more difficult to price it if you are told that the printer has had some technical problems and that the seller is no longer sure if we will print another 100 euros in the future. It might be less, but it might also be more. Now, a company can be considered as such a printer. It generates money, cash, future profitability on the basis of certain assumptions, past and future. 2 questions should bother you. How much money will the business potentially generate in the future? And secondly, with what likelihood, or the other way around, what is the risk that this will not happen or will happen differently? So you need to draw up a business plan that makes sense and which is achievable. And secondly, you need to agree on the underlying risk. The risk factor includes all kinds of risk, company-specific risk, market risk, or country risk. The risk factor has a significant influence on the value that comes out, so it must be clearly justified which risk factor has been applied. The risk can also be expressed positively in an investor's expected return on such an investment. It is therefore important to justify the basis of the assumptions and the risk factor. There are other hybrid approaches, such as the Stuttgarter Verfahren, which is often applied in Luxembourg, and it has been anchored in the Luxembourg tax code. But these kind of models, which calculate averages between an asset value and a profitability value, are perhaps good to have some idea of the valuation, but do not represent models to perform a proper market valuation. Another important element is cash in the company. There's a lot of discussion in the literature on how to treat this cash, respectively the cash equivalent, short-term receivables and short-term payables. I prefer to talk about excess cash, which is the cash that exceeds the normal functioning of the company. We therefore calculate the company's working capital requirement and leave a reserve of, let's say, 2 months. The amount that exceeds this amount of cash is added to the valuation, possibly with a theoretical tax burden to be considered to simulate the payment of a dividend. I would also like to talk briefly about intangibles, a notion that is often evoked in the context of family businesses. In fact, for me, the intangible can be calculated by subtracting the net assets from the value of the company. The intangible is therefore included in the valuation. Like every economic asset, the intangible is also characterized by its capacity to generate income. If the latter generates income, its value is included in the valuation, and if the asset does not generate income, it has no value. In conclusion, I would like to stress that there is no single value for a company. At the end of the valuation exercise, it is crucial to put everything together the economic analysis, the results of the valuation methods, and to conclude on a range of values according to the weighting of different criteria: current situation, future potential, risks, etc. Evaluation without the qualitative analysis and without adjustments or risk assessment is almost certainly not correct. The value of the company remains subjective and reflects the interest that the potential buyer will have for this company, offer and demand. Valuing a company therefore consists in identifying and rendering these subjective interests objective. Thank you.
Thanks a lot for this presentation and this interesting, let's say, overview on the best way to evaluate non-listed and SMEs companies. So it's quite interesting. So now let's move to the Q&A session, and maybe a first question more related to the KYC presentation. A question to you, Paul Gerhard. So can you briefly explain the business model of the local KYC hub in Germany? Is it like iHub?
Yeah, thank you, Francois. The business model is really similar, and Pascal and myself, we have done a lot of work in the past couple of months in order to see whether the models are compatible. And in fact, the ideas resemble pretty much. Of course, we do have some jurisdiction-specific regulations in Germany that we need to follow. For example, we can't do the entire screening on behalf of a bank. But in general, the models regarding the core data are very similar, and therefore we have decided to join forces under the Symphony umbrella.
Okay, thank you. Maybe a question to stay on the KYC side, Pascal. Pascal, could you please explain how a business model will work? Is it a free model for corporate users?
Hi, good evening, everyone. And again, Francois, congratulations for this perfect organization and the quality of the conference as a whole. Yeah, well, our business model is, as you remember, this is outsourcing for KYC, meaning that the banks will actually transfer stocks of their clients to us, and we're going to be doing the review of the files. And while we're doing the review of the files, we're going to still collect the updates that the corporates will be doing with their banks, and the banks will load them into our system, and we'll do the role of the checker. We will also, and we are actually connecting to the trade register in order to get fresh and updated data. And then the third way to update a file is actually to allow the corporates to connect to our system and receive notification about documents that we need or other information that we need from them to update. So therefore, we have an interest in receiving the up-to-date information directly in our system from the corporate so that we can do our job on behalf of the bank. So yes, it's free for the corporates, and the banks are actually paying for the service.
That's the same in Germany, by the way. So if we have German corporates, and it's a key principle of Symphony that the service to enter KYC data and to upload documents has to be free for corporates.
I think it's good news because a lot of corporates, as you can imagine, are expecting a free solution. They are not really ready to pay. Although I keep thinking that if you have a good service, it could be reasonable to accept to pay. If you can reduce the, let's say, workload on your side, it would make sense. So maybe we should move now to a question for StoneX. And the first question maybe for David Unsdorfer. For corporate that are already using a TMS in ERP as a central system, and where is StoneX Technology Services able to add value for corporates?
Sure, thanks, Francois. So I think the answer to the question fundamentally is, it's great if corporates do use a TMS or an ERP as a centralized system. That brings a whole load of benefits. But we're in an increasingly open ecosystem where interoperability is so important. You need to be interoperable with your banks, with local payment systems, with various different providers. And we help drive interoperability without having to make changes to these applications. So for the purposes of this conversation, let's take a couple of examples. Number one, When it comes to actually communicating with your banks, you can either do this directly on a host-to-host basis, or you can have a single relationship via Swift, for example, where you can communicate with all of them seamlessly and singularly. That's one way we help. Obviously, all of your banks are kind of managed at an application level within the treasury management system, but actually communicating with your bank can be a bit more complex. And corporates want to do this in a way that makes them agnostic for future proofing purposes. So by working with us, we can help them to potentially bring on board new banks in the future without having to make wholesale disruptions. And that can be done quite easily and quickly. Perhaps more interestingly, for the purposes of this conversation again, we help our customers completely automate their end-to-end payment processing. And just to have a bit of detail, you know, corporate need to make payments all over the world, like I mentioned earlier, to loads of different counterparties and loads of different formats. The expectation on data is pretty intensive. But so far as the application is concerned, it's very common for a TMS or an ERP system to only speak in a specific file format, like a text format or a CSV format, but your counterparty requires something different. So when your application is creating a payment file, you need to ask yourself, is this payment file acceptable to my bank? If yes, it will automatically flow, there's no problems. But if not, your bank will likely charge you to transform that file into a format that's acceptable to the local payment system and charge you for that service. And the second question you need to ask yourself is, do I have all of the relevant business information within this payment to make sure that the payment is processable? If yes, great. But if not, you'll almost certainly face some kind of delay. And that obviously has a cost implication. So with our messaging hub, what we basically allow customers to do is leave their central TMS or ERP intact, make no changes to them. Payments can flow into our messaging hub where they are enriched, they are validated. We check to make sure that they are compliant with local market requirements. We screen them, we make sure they're regulatory compliant, and we essentially process them in a manner of their choosing via Swift or via other channels. And because we actually as StoneX make payments in hundreds of territories and hundreds of currencies, we basically inbuilt this data into our messaging hub so that payments are automatically correctly formatted on the fly, and new different flows can come on seamlessly, quickly, in enormous real time.
Thank you. And maybe just to add another comment. So I understand that it's also possible for a corporate customer to use FX platforms. So if they use 360T, CurrentX, or other platform, they could also be connected to StoneX via the platform. Correct?
That's exactly right. It's important that everything is interoperable.
So no major change compared to a normal bank, I would say.
Exactly.
Thank you for this information, David. And so maybe a question for you, Philippe. What differentiates yourself from other providers in the market, and why top 10 banks in the world are using StoneX, or even central banks, by the way, use StoneX for their payment? Could you give us more explanation on that?
Yes, so thank you very much, François, for the question. I think for what differentiates us from other providers, there are two main aspects to consider, which the first one is the main one, and we will come back to talking about the banks, is our own network. We have our own network of 350 correspondent banks that are based in about 180 countries, which gives us direct access to 140 currencies. This network has been built for over 30 years, which has specialized us and given us a lot of expertise in order to build direct relationships with the central banks, with the local banks. That makes us gather a lot of market intelligence, and especially because we visit all these banks, we do credit checks, compliance checks. So it's a lot of operation, and we have it quite good now with the experience we accumulated. This direct access to the market with the network enables us, with no intermediaries, to get extremely competitive rates because there's no one in the middle, and to give transparency and control over the process for the payments, and to be able to provide a status update. And the other thing with the network is the fact that we try to focus on that is that it enables us to open markets for our customers, such as we've set up an entity, an FX bank entity in Brazil in the last years. We've updated our currency list with new currencies, such as in UAH in Ukraine or in Kyrgyzstan, and yeah. I think that's on the network is very, very, very important, and how direct it is. And the second aspect, I think it's the solidity and the diversity of our financial institution as a group. The strong balance sheet that we have allows us, and that's quite unique, to settle the transactions of our customers with our own treasury. So we don't ask for their funds in order to send them to this country, but we fund the operation with our own treasury, which provides a lot of security. And also this strong balance sheet enables us to make strong investments on the technology side, in order to be always flexible and to be responsive to the customers' request in their automation. And I would finish with the fact that the large range of product, as I said in the introduction, that we offer is also a big plus compared to other providers, because we have a very strong specialization in each field that we cover, and the reactivity of the group. Also, I would finish with this settling new entities to be able to serve our European customer base even before Brexit happens has been showing a very good, strong reactivity and seriousness for our customers. On the bank side, I would say that the main reason that the banks use us is because maintaining the correspondent network, and again I come back to the network, that as we do, has a strong cost, and it's cost efficient. It's more efficient for them to outsource this to a specialized institution in order to complete their currency coverage for their customers. And so we do that for about 60 banks and some central banks. So we can do scale economies maintaining that network. And it might not be as interesting for them to maintaining it themselves, as the cost of running local accounts and relationships all around the world can be quite high. And the reason why they need to complete their coverage is the fact that their clients are requesting those currencies and the facility to make payments in those currencies. And the second aspect is also for them to be able we enable them to participate in the FX process. So instead of sending hard currencies to all these countries, they can actually participate in the FX process and provide a proper FX rate to their client upfront. There are some of our customers, or banking customers, are actually happy to talk about it. So it's a public information. You can find it on our website. We don't use that for promotional purposes. It's just the fact that we act with them more as partners than competitors, because we really enable them in order to serve their customer base.
Okay, thank you. And I read that at the CBPC conference in Berlin, that Deutsche Bank, it was public information, was one of you customers. So, and as you mentioned, central banks and even global banks are having recourse to your solution. It just proved that for paying in these countries and sometimes hedging these currencies, it could be a big issue. So I can imagine that for corporates, it's certainly a major one. So it's interesting. So thanks a lot. Maybe a question that is coming from Zoom. So back to KYC, or could any solution work if the banks are continuously not trusting each other? I personally heard talking about KYC solutions since many, many years, but just like the Loch Ness Monster, what a comparison, never saw it live. I'd be retired before it comes on the market, if it does one day. So a question for you, both Paul or Pascal, are you more optimistic than our, let's say, corporate member?
We are live. So I would like to say, well, this is finally happening. And I understand the question, because it's been there for the last 10, 15 years. And actually, it's quite difficult from the very start. And yes, trust is a very important element. And as I answered on the chat to everyone already, the solution goes via a third-party validator like ourselves and a regulated entity, ensuring that there is confidentiality and also keeping professional secrecy, that we invest in security and in cyber security, and also in the hosting of where the data and the documents are, and in business continuity, so BCP. And then with all these ingredients, you can then start convincing the bank that they can transfer their stock over to you, ensuring them that you won't be sharing things that they are not allowed to see. And especially, of course, not sharing who is client of who and who's got business relationship with who. And I also understand the question, because from the very beginning, we saw many initiatives that did not care about those aspects, which are very crucial. And then finally, the last one is that in the IUP system, we, from the very beginning, and you know, I went into conference like these ones, and I heard people raising their hands. Oh, yes, we need the regulator to say, or to support one of the solution, or we need standardization, etc., etc. Actually, you can't have a one size fits all, especially in terms of risk-based approach. So each bank or asset managers or whatever company wants to outsource their KYC needs to be in a position to roll out their risk-based approach and treat a client, even if this client is mutualized, in a different way than the other counterparty. And so we have rolled this out in our system, and we're enabling the banks to roll out a tailor-made risk-based approach in our system with a specific risk scoring, and requesting us to do a different due diligence than others will do on the same client. And that's very important. And once you have all these ingredients, then you can get the banks, and then trust can be then established. So trust between themselves directly, no. But trust via a trusted counterparty in the middle, yes. And here we are, live since a year, and onboarding many banks in 2021.
Good news, but I guess our, let's say, member was referring to the failure of, let's say, attempt like Bloomberg Refinitiv, or the fact that some of the other solutions we already presented are limited to a certain category of customers. So you both have the ambition of enlarging the scope and opening a solution to everyone. Maybe Paul, a last comment on the same question.
Yeah, I think what Pascal mentioned is very key to success here. Can you hear me? Yeah, okay.
Yeah, perfect.
The trust is one of the components, and the tailor-made approach. This is something which I would like to stress as the last finding. The banks need specific and bank-specific information according to their risk-based approach. So we need to provide the banks with what is actually needed on a trustworthy basis. This is the key to success. And we are also a regulated entity in Germany, so we're acting in the same way as IHUB does for Luxembourg. This is the key changer compared to Refinitiv. And the Symphony protocol overall is flexible enough to really provide what the bank needs, and not more and not less. And that is the key success factor which I believe in here. We don't want to be too intrusive like others for corporates, not asking for any additional information that is not absolutely relevant. On the other hand, we want to fulfill bank-specific needs if there is particular requirements from a specific bank.
Okay, thanks a lot. In order to terminate this conference on time, I propose to stop here the Q&A. So the remaining question will be transferred to the different speakers. Before closing this session, I would like first to thank you all for participating to this e-conference and to the other e-conferences of this year. It was a quite a special and bizarre year, I have to confess, but no, at ATEL we try to continue, and we will be there back in 2021 for e and our physical conferences. So before closing, I would like to thank all our, let's say, participants, to thank our sponsors, StoneX, Symphony, Gresham, for being there and sponsoring the Enki for let's say sponsoring our event. And I would like to I would like also to thank our 7 speakers of tonight. And before closing, I would like to wish you a Merry Christmas and Happy New Year. And let's see you in 2021 for other ATEL conferences. Thank you.